Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about gold. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that at the moment we are in a very strong uptrend. The market has been creating a series of monthly higher highs and higher lows. So essentially these impulses and corrections, and all this huge push to the upside was fueled by strong institutional buying. And we will be speaking about that in just a few minutes when we move to the commitment of traders analysis. But for now, let's continue to analyze this uptrend. Now, all this push to the upside originated from the rejection away from a strong break of structure. So a strong break and retest of a historical structure level, which is this one here, from which all these previous rejections to the downside were created. Then the market broke above that zone and all this previous resistance was turned support here. The market retested the level after breaking it to the upside, because what we know is that previous resistance, once it is broken to the upside, becomes support, especially if that same level was already respected as resistance in multiple occasions in the past. After the break, all that previous resistance becomes support. Traders are looking at this level, especially institutional traders, and after a break and retest, the essentially level is switched from resistance to support, and traders are looking to buy at that level. And that is exactly what happened here. After the massive break to the upside, we had the retest and a huge rejection to the upside. Now, when you have an uptrend, it's normal to have impulses and corrections. You never expect the market to just go up in a straight line, because that would make the market become overextended to the upside. At some point, we always tend to see institutional profit taking, which drives up potential correction. In this case, we had one here and the retest right here. And then new buyers stepped in. New institutional buying happens and the market continues higher. That is the definition of an uptrend itself, the creation of higher highs and higher lows. So at the moment, since the last move was this new impulse to the upside, the next logical step would be first a correction and then more bullish continuation. So let's keep all of this in mind and drop down on the weekly time frame. From a weekly perspective, the situation is quite clear as well. We had a huge impulse to the upside, then the market created this consolidation pattern in the form of a triangle formation, in which essentially you have lower highs and higher lows at the same time. After an impulse and a consolidation, in this case in the form of a triangle formation, what you naturally expect, and I'm sure that you have seen this pattern over and over again in the market, is the breakout to the upside, which is in fact exactly what the market did. And so far from this breakout, the market has been creating a series of impulses and corrections. Also here we had impulse, correction, again, new higher high, higher low, higher high. Now we had a new correction. The next logical step, if this uptrend is to continue, is to see more continuation to the upside and essentially new institutional buyers to step in. If we drop down on the daily time frame, we can see that the market has now reached a very important zone. In fact, in all this push to the upside, there is one candle which is not related to the move, which is exactly this candle here. When we had this massive impulse here, the market stopped, meaning that this level was a level at which institutional players were paying attention and they started shorting when the market hit this level. Now, traders, after the market broke above the level, are looking at this level as support because, as usual, previous resistance, once it is broken to the upside, is turned support, and the market is already respecting this level, creating a deceleration after approaching the level with quite strong bearish momentum. So there is definitely the possibility inside of here to see some institutional buying. Speaking about institutional buying, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, and we look at the data for gold, we can see how with the last reports, net positions have been decreased. We went from 200k now to 163k, showing how institutions in the very short term are moving back to the bearish side for gold, which is exactly what we expected, because after a huge impulse to the upside, what you are expecting for is a correction. We have seen that on the monthly and weekly timeframes. Essentially, after an impulse, you expect a correction. And in fact, I did speak about gold when the market was around this area and explained all the reasons for which I was expecting a correction, which is exactly what the market now gave us, fueled by institutional profit taking. In fact, we can see tens of thousands of longs getting closed. And I will link in description that previous analysis so you can go and check it out for more free education. But until the market has reached this level, what you would expect is again to institutions start adding longs. We still don't see that, but we could easily see that with the new report. Institutions again moving back to the bullish side for gold, because already in the long term, the positioning of institutions is aggressively to the bullish side with 240k longs compared to only 76k shorts. So if institutions inside of here will once again start adding longs, and we see that with the new report, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.